red trend is what the pre-open is telling us. Let's wait for some more clarity to emerge, and then we'll pull up more rates. But in the meantime, here's an important development from the FMCG space. After biscuits, now your detergent and soap is going to get more expensive. Sources have told CNBC TV18 that FMCG majors ITC as well as HUL are looking to hike prices by anywhere between 3 to 21%. This after, of course, CNBC TV18 reported in September that HUL had hiked prices by 3 to 15%. So another price hike seems to be in the offing. Abneesh Roy is joining in. He's from Edelweiss Securities. Abneesh, thanks for being with us. I don't know, what are you hearing in your own channel checks, and how would you sort of dissect such a massive price hike if it comes through? Could it start having an impact on volumes?
Yes, thanks. Yes, it's a positive step for Hindustan Unilever. We had seen in Q2 there was a 7% price hike. How HUL operates is they have a winning in many India strategy. So they will take staggered price hike, and in different parts of the country and different SKUs, the pricing will happen in a staggered manner. Having said that, I do expect that this is a further price hike, and we'll get more clarity on the quantum from the company. But we have also picked up that, yes, in many parts of the country and many SKUs, there have been price hikes in soaps and detergent. This again shows the very strong pricing power of Hindustan Unilever. And we are quite positive on the company. We do expect that the company should do well from here. The stock has corrected around 20% in the broader market sell-off. But what works for Hindustan Unilever are essentially three things. One, out-of-home consumption is going to come back. We have seen the offices, etc., doing quite well. There is supposed to be a harsh winter this time. And whenever that happens, the skin creams of HUL do quite well. And this latest price hike also should aid the margins. If you see in Q2, on a 2-year basis, Hindustan Unilever's margins were at 25%, which was in fact quite stable. And it was a very balanced growth. So HUL saw 11% sales growth and 7% price growth and 9% EBITDA growth. So I think HUL is going for a very balanced and measured growth. What will be the trigger for the stock from here on will be any rural Nielsen data, because that was a key dampener for investors. In Q2, HUL highlighted the Nielsen data is pointing towards some rural slowdown. But if you see Kantar data, etc., most other companies also saying that rural growth is not a structural issue. It's more of a transitory because of base effect. And government is taking a lot of steps in terms of augmenting the consumption. So I would say that stock is now in oversold territory. Frontline indices like tech and banking have also corrected. But this is FMCG is a sector in which high pricing power is there, high predictability of earnings is there. And maybe in 1 or 2 quarters, you will see the gross margins and EBITDA margin, the worst will be behind. As I said, in Q2 also, EBITDA margin
Abneesh, allow me to ask you a counter. You just spoke about the Nielsen data, which is pointing towards some weakness in rural. With this kind of a price hike, I'm just wondering, will the rural market not see more pressure purely in terms of volumes? If you're talking about small sachet packs and with this quantum of price jump, is that something that one can ignore entirely?
So one is when you see these price hikes, you should not take them that this is the full portfolio price hike. So if you see even in Q2 when a lot of the price hikes had happened and you did highlight those numbers, the actual price hike at portfolio level is only 7%. And then there is a sachet where there is no price hike, the grammage. This time, good to see that actual price hikes have happened. So yes, there could be some reduction in consumption, but entire industry is going to take the price hike because this is a 10-year high inflation. So I don't see that too much of cut down will happen. But yes, in the near term, the company will see more of price growth and less of volume growth. But as I said, what works for the volume growth is out-of-home consumption coming back, urban consumption also, modern trade also coming back, and also winter being quite good. So, and we'll also see the hygiene products in the base also, those were high in the Q2 also, those will start to correct. So net, yes, some impact will be there. But I think overall, every player is taking, so consumer doesn't have much of a choice. So net, you can't really cut down on soaps and detergents, especially when again, wave 3 is being talked about because of Europe cases going up. Again, you will see those hygiene products selling well because consumer is going to be very careful.
All right, we will leave it at that. Thanks a lot, Abneesh, for joining us. By the way, the pre-opening rates have settled now and it is looking like an ugly picture if you're a bull. The Nifty is down 200 points almost. The mid-cap index is down about 300 points as well. And the Bank Nifty is down 530